Well, that escalated quickly. So I've been in the mortgage business 26 years, and I don't recall a time in the past where interest rates have risen this much in such a short period of time. So where are we at? It wasn't very long ago that people were getting rates below 3%. Now we're in the fives, heading towards the mid to upper fives, and I'm not sure I see any signs of this stopping. So I guess the question is, should you still buy a house? Well, let's talk about some things with the market. The typical middle class household made $2 million from owning a home in the last 10 years. So just like the stock market, it's time in the market, not timing the market, that creates wealth in real estate. You've got to own it. And the longer you own it, the more wealth you're going to build. Now, timing the market would be great. I mean, sure, we all would like to take an opportunity like 2008 where prices were down and we could jump in the market and buy super low and make a ton of money quick. But folks, I don't see that happening. The market is pretty darn strong. The average borrower at the end of the last quarter of 2021 had a 760 credit score. And we know that people who own real estate now have a ton of equity in their properties, not just to price appreciation, not just from that, but because a lot of these buyers are putting a lot of money down when they're buying their next house. They're transferring the equity from a previous property into the new one, or they've got a significant cash position. I don't think these people are going to walk away, even if there is a decrease in values. And maybe the rates rising isn't such a bad thing. I mean, sure, your monthly payment just went up 400 or 500 bucks a month, or you're going to have to drop your expectations. Your purchasing power has declined 60, $75,000, but we cannot sustain price appreciation at the levels that we've experienced them in the past. So if the brakes get tapped just a little bit, I don't think that's a bad thing. And in fact, maybe the brakes need to get tapped so that the sellers don't have so much control over the market like they do today. Why are we in this situation? Well, there's a number of things. Number one is, things have changed since COVID. Folks are working from their home now, and they're wanting to stay in their house and or find one in different locations. It probably makes why Tampa is such a hot market, the Florida market in general. If you're going to work out of your house, why not go where you want to go? We do have inventory issues. Again, I think a lot of it is because the market is too hot, but over the last decade, they were not building houses like they should. And so we certainly have a glut issues when it comes to new housing. And those issues are caused by COVID, Ukraine situation, supply constraints, etc. So I think that will help continue to prop up the market. I don't think we're going to see a bubble or a crash anytime soon. Then you've also got millennials and Gen Z coming into the market, and it's time for them to buy. And they've kind of been pushed out of the market to some degree, just because of folks that already had the equity and whatnot can make stronger offers. It's been hard for first-time home buyers in this market, and I'm hoping at least with these higher interest rates, that'll change. So that's my opinion on where the market is going. I don't think 5% rates are terrible. Some folks said, hey, maybe you shouldn't buy a house with these rates going up. But I'm telling you, get in the market. The sooner you get in the market, the more price appreciation and wealth you're going to have, even if rates are 5 or 6%.